Hey everybody, Rob Maurer here, and today we are talking about a new firmware update for Tesla's vehicles, an interesting supercharging partnership, the Neuralink event on Friday, some news on Ford and their battery strategy, and some news on US emissions regulations. Of course, today though, we do have to start off with the stock price. This is the first day of split adjusted trading after Tesla's 5-for-1 stock split. Today we closed at $498.32, up another 12.6% from Friday's close. That continues after hours, right now breaching the $500 per share mark. So at $500 per share, Tesla now trading above the $480 Tesla share price from April. However, that was pre-split. Even without a split, that wouldn't look too bad, but of course, Tesla's now worth 5 times what it was a few months ago. Tesla's market cap now sits at right around $464 billion. Quite a few different analysts put out updated notes to account for the split today, and with that we saw some price target increases from Argus Research and Canaccord Genuity. Argus Research has increased their price target to $566 per share, post-split of course, up from $378 per share. Some analysts do have higher bull case price targets, but this is the highest base case price target on the street right now. Pre-split, that would have been equivalent to $2,830 per share. That implies a market cap just above $525 billion. Argus analyst Bill Selesky wrote, quote, "Despite the stock's strong recent run-up and high PE multiples, we see further upside based on the company's improving production outlook and accelerating consumer demand," end quote. Also increasing his price target was Canaccord Genuity analyst Jed Dorsheimer. Previously, they had a split-adjusted price target of $325 per share. That has now been upped to $442 per share post-split, about $2,200 per share pre-split. Interestingly, they didn't actually change their forecast with this increased price target. They wrote, quote, "We have adjusted our price target and model to reflect the split, but have made no other changes to our forecast," adding, quote, "While the split does not change the value, we suspect momentum traders and retail investors will find the lower threshold per share more attractive," end quote. So basically they seem to just be assigning a higher multiple on their forecast based on market sentiment, which I think is pretty interesting. I don't tend to see that too often from analysts. Not all analysts were as bullish as those two though. New Street Research Pierre Ferragu, who we've had on the podcast before, and who previously had one of the highest price targets, or I believe the highest price target on Tesla stock on the street, actually downgraded Tesla to neutral, saying, quote, "I'm just telling investors, when the stock pulls back, look at it again, but for now it's probably fully valued," end quote. Though he did note that there's probably still a lot of upside from things like autonomy and energy that may not necessarily be priced in to the stock. All right, moving on from the stock then, we have a firmware update to discuss. This started hitting Tesla vehicles on Saturday, the 29th, though so far this release has been extremely limited. The big update here is speed limit sign recognition. Tesla writes, quote, "Speed Assist now leverages your car's cameras to detect speed limit signs to improve the accuracy of speed limit data on local roads. Detected speed limit signs will be displayed in the driving visualization and used to set the associated speed limit warning," end quote. So that may not sound like all that big of a deal, but there had been some speculation out there because of some patents that Mobileye had that Tesla wouldn't actually be able to utilize speed limit sign recognition, potentially inhibiting their progress towards full self-driving, but clearly that's not the case here with this feature now deployed. And then the other important consideration here is that Tesla should be able to recognize some more full self-driving revenue from the pool of deferred revenue for the feature, as well as moving forward. Probably not a huge chunk, but it does move the needle a bit. The other interesting feature in the 2020.36 update is what Tesla calls a green traffic light chime, which will play an audible notification when a traffic light you're waiting for turns green, or if you're behind another car, it'll play when that car starts advancing at a light. So maybe a nice feature there for people that tend to be on their phones a little bit during traffic lights. I'm not entirely sure it's a good idea to encourage that sort of behavior, which this feature does seem to do, but Tesla does say, note, this chime is designed only as a notification. The driver is responsible for observing their environment and making decisions accordingly. The last thing to mention on 2020.36, there have been a lot of rumors going around that this is the first update to include the core autopilot rewrite, at least in shadow mode. To some extent, those rumors have persisted, but Elon did reply to Holmars on Twitter specifically asking that question, and he said, quote, "Not yet," end quote. Remember back on August 14th, so a couple weeks ago, Elon said that the limited public release of the autopilot update would be in 6 to 10 weeks. So essentially 1 to 2 months from now, but it could also show up in shadow mode before that. Rounding out the news from Elon's Twitter, he did tweet that he'll be in Germany this week, said he's heading there for what he calls a Tesla side project of building RNA microfactories for CureVac and possibly other companies. He says, quote, "Conversations with Harvard epidemiology confirmed that a high-speed RNA printer has potential to be helpful for vaccines and cures in many areas," end quote. As for the business potential of this, I don't know. I mean, I need to do more research on that. If we have any experts on that area, let me know in the comments, but Elon said that he's headed to Germany for that and also for Giga Berlin. So perhaps we'll see some sort of belated Giga Berlin groundbreaking ceremony this week. Next up today is some news that was shared on the Tesla Motors Club's forums by TMC user Marco RP, who somehow, I'm not sure how, but has attained a letter from Target dated back from December 10th of 2019, addressed to Tesla's supercharger team, which actually discloses 42 different locations of Target stores that Tesla may be installing superchargers at. These would not be the first supercharger stations at Target stores. The two companies started a pilot program back in 2017, which they said at the time they hoped to continue expanding. I haven't really heard much since then, but hopefully this is a good sign that that has gone well and Target will continue to expand their charging infrastructure. Next today, I wanted to touch on another Elon Musk project, Neuralink. They had a progress update presentation on Friday. Tesla came up a couple times throughout the course of that event. If you didn't get a chance to see it, Neuralink unveiled sort of the prototype that they have right now and showed it being used in pigs. They did a demo with a pig named Gertrude who had a Neuralink device installed, which created an audible beeping noise every time the neurons associated with the pig's snout were firing, showing Neuralink's ability to read those neurons. Very interesting technology, to say the least. We could spend a lot of time talking about that, but as far as Tesla goes, Elon did mention that, yeah, of course, someday you would be able to control your Tesla via summon or otherwise with just a thought if you had a Neuralink installed. Maybe we'll be talking about that as a firmware update a few years down the line. Moving on to some broader automotive market news then, Autonews.com today published excerpts from an interview with Ford's chief of product development and purchasing, and I think the headline gives us a clue as to where this is going. It reads, quote, "No advantage to having battery plant, Ford says," end quote. Ford instead would prefer to rely on their suppliers, and in one of these interview excerpts, the chief of product development notes, quote, "It gives us the ability to access the latest technology and innovation across multiple suppliers, so I know exactly what the state of the art is from the Korean suppliers, the Japanese suppliers, the Chinese suppliers, and I'm able to compare notes across them maybe better than they can. And then, of course, we have the competitive tension with dealing with multiple suppliers, which allows us to drive the cost down," end quote. So, I mean, that all sounds well and good until you take a little bit of a closer look at it. So we'll start off with that first sentence. It gives us the access to the latest technology and innovation. Well, by default then, that means that Ford is not going to be the one driving that latest technology, that latest innovation. Ford is going to have no proprietary access to any of that. They're just going to go ahead and strap on that new technology onto their vehicle, just like they've become accustomed to doing, which I suppose works just fine as long as all of your competitors are going to do the same thing. But the problem is that Tesla is not going to do that same thing. They also assume that the costs are going to come down due to suppliers competing, but if suppliers are supply constrained themselves, well, the competition in the market, that's not going to do a whole lot to benefit Ford. The suppliers are just going to sell that supply that they have access to the highest bidder. I thought Auto News' comment on this put it pretty well and pretty savagely towards Ford, saying, quote, "Despite its insistence that the supply base is prepared, Ford has said tight battery supplies would limit the upcoming Mustang Mach-E to 50,000 vehicles globally in its first year of production," end quote. Well, I don't know. It seems like securing battery supply could be an advantage of having your own battery factory. Just throwing that out there. Anyway, in another comment, he, I think, discloses the real reason for this, and that is risk aversion. Ford's chief of product development cited Toyota as a cautionary tale, saying, quote, "They invested to vertically integrate nickel metal hydride batteries for their hybrids, and after spending over $1 billion to do that, the technology shifted to lithium ion, and they were among the last to switch over. I don't want to put Ford in that position," end quote. And I think that last part is particularly telling. I don't want to put Ford in that position. I don't want to take that risk for Ford or for myself and the job that I have now. What a contrast to how Tesla approaches things, of figuring out for themselves what's going to work and then pursuing it to the fullest degree possible. I don't understand how people can read things like this and then sit there and say that legacy automakers are going to be competitive with Tesla. If you just draw these paths out, the paths that these two companies are taking, they're so very different and they lead to such different outcomes. I mean, in this simple quote, they have basically ceded the outcome to Tesla. It is Tesla's to decide. It's just up to Tesla to not fail. I guess we'll see if Ford feels any different after Battery Day. I can bet you that we won't see another comment like this after Battery Day at least, because at that point, it will be extremely clear what sort of competitive disadvantage a comment like that implies. Final piece of news for today, the U.S. Court of Appeals for the Second Circuit, in a 3-0 decision, has overturned a rule put in place by the Trump administration in July 2019 that had attempted to suspend previous regulations that had been put in place that had raised fines for missing emissions requirements. That 2019 rule was being challenged by the Sierra Club, the National Resources Defense Council, and 13 states as well as Washington, D.C., and that group has now been successful in this Court of Appeals. So that will wrap it up for today. As always, thank you for listening. Don't forget to subscribe and sign up for notifications. Make sure you're also following me on Twitter at Tesla Podcast. And I'll see you tomorrow for the, Tuesday, September 1st episode of Tesla Daily, the last month of Q3. Thank you.